You think investors would just take the news of policy continuity favorably right now? Do you really think that this any disappointment on the key portfolios would have brought down the markets?
Good morning. I think the market's bit of consolidation today has to be seen in the context of the rally it has had, so at 2 all-time highs. So it's just consolidating its gains. On the subject of continuity, I think let me just lay out the views that we have. I think this election took place in the context of a few things. If you look at NDA 1, the priority was basically to formalize the economy, raise the tax levels. And NDA 2, those tax dollars were spent for infrastructure investments and promoting private capex. So as a result, while the fiscal consolidated, the capex to GDP grew, and the revenue expenditure to GDP remained stagnant or even fell. As a result, capex did very well, consumption not so much. It is in that context this election, economic context election was held, and the results were there. Now, we do believe that there will be policy continuity. The fiscal discipline will be maintained. There are a lot of homework and a lot of groundwork has been done to support private investments in the areas of electric vehicle, renewable energy, to capture the China Plus One opportunity. All those will remain. But having said that, I think there will be some rebalancing exercise, some rebalancing to include some of the welfare measures, which would include some sort of spending on rural areas, including that of housing, healthcare, education. I think all those things will now be accommodated. This is not a U-turn, but some sort of accommodation of some welfare measures in the overall policy mix.
In the overall policy mix, what sort of questions are you fielding right now from investors, from your clients about allocating to India? Are they still circumspect, given that it's a weaker coalition from a seat count perspective?
Well, I think from overall perspective, there has been concern on the valuations of Indian markets. And of course, this election verdict has been a bit weaker than expected. To that, our view is that, yes, election verdict, I mean, the BJP, the kind of seats they got is a bit lower than expected. But we were running with a base case of a government with a reduced majority. So to us, it's not a very big surprise. That's the first point. But I think if you look out and even adjust for the policy, adjust for some accommodating some of the welfare measures, it is not vector populism. Just adjust for some welfare measures of the overall policy mix. We think the fiscal discipline will continue. The growth of 7.5% of GDP is going to continue with inflation relatively within control, and the corporate earning growth rates at 13-14%. You see that in the context of other emerging markets. I think in that case, India really stands out. And for that, it's trading at a multiple of something like 18 times price to earning ratios. We think this, and on the top of the domestic liquidity that is flowing to the markets, this kind of multiple is justified. So therefore, I think the long-term growth runway of economic growth, as well as opportunity for the market to compound, at least in line with earnings, is pretty much there.